Good afternoon, everyone. This is AJ again with FBS Securities, bringing you another weekly recap for the week of January 27th. Like I suspected last week, this has been a very volatile and crazy week from the start of Monday, given the DeepSeek news to the Fed FOMC meeting, and now we're getting some tariff drama uh, with uh, with President Trump. We'll just get right into it. So first of all, a risk disclaimer: this information provided in this video is for educational and informational purposes only. This is not any investment advice. So to end the day, the S&P closed down 53 bips, with the Nasdaq closing down 15 bips. For the week, both the indices were red, and basically today was also the end of the month. So Nasdaq or S&P closed up 2.69%, and Nasdaq was up 2.16%. The main winner was really the Magnificent Seven stocks and even the Dow Jones. So some low volatile stocks with almost 4.67% and 4.64% return for the month. Um, Overall, most of the indices were actually pretty red today. I think around 1 o'clock or something, President Trump tweeted that he will initiate the tariffs on Mexico and Canada starting tomorrow. And the markets took a complete U-turn. So we were up almost. It was basically 1.3% reversal from the downside, or from the upside. So very unfortunate way to end the day, but that's how it is sometimes. The biggest losers for today were KWeb and Bitcoin and even energy for the most part. And then the winners, whatever indices were up wasn't anything too crazy. The internet, ETF, communication, and telecom were up, and very small gains in the software section. But for the week, the leisure index, which is kind of all your airlines, and it'll include your Royal Cruise and Carnival Cruise and things like that, was up 3.31%. And gold had a pretty good week, as well as KWeb. And the biggest winners for the month was again gold and Bitcoin, and of course ARK was also in there, as well as some medical devices and whatnot. So very crazy week, and I think this should kind of continue. And I'll kind of just go over some charts and kind of go from there. So for the week, I'll kind of go over some of these earnings report, or not earnings reports, but some of the earnings reactions and whatnot. We'll start with Microsoft. So Microsoft, I think, came out, and earnings wasn't bad. They kind of lowered their guidance a little bit, and I think they're going to be increasing their CapEx spending on AI and things like that. So the reaction definitely wasn't the most positive, and it's coming back into this previous, this little area of support, but not something that I was hoping to see. Apple as well. This was a very, very nasty reversal bar. It's very rare you see, Apple is gapping up almost, I think it was almost up 4.21% from yesterday's close, and then took a complete, almost a 4.5 point reversal from the upside. So definitely not something you'd want to see. And I think, yeah, I mean, not the best and not the prettiest candle, especially with some of the events that happened today. We can look at Meta. I was noting that this one is kind of, above its trend lines and things like that. So it's not too surprising that we start to see some reversals and some crazy price action, but Meta still closed up green on the day. But I mean, it was up almost into the 710s for the session. So yeah, nothing, the good thing with Meta at least is they had a really good quarter, and they're just they're really compounding well with the ad revenue. They had some of their best sort of spending, or sorry, some of their best revenue. And yeah, I'll go over some charts for that a little bit later. But um, yeah, it was even if you're looking at so you can on Toss or Thinkorswim, you can kind of make your own custom index. So I have this for tracking the Magnificent Seven. So looked like we're about to have a nice breakout, but then we weren't able to quite do so. So we might just get back into that consolidation range. And of course, I think Tesla did report. as well. And Tesla, the initial report, like I made on the video Wednesday, was down, but then Elon was talking about the future and some of the more exciting stories to come from Tesla and what to expect. So we did see an attempt to break to the upside, but again, I'm still anticipating it to kind of stay into this what is this? Why is my it's not letting me drag uh into this 370 to 420, 425-ish range and consolidate a little bit more. Um, And yeah, that not definitely something you want to see, but the market will always give you head fakes on both sides. Going over the S&P just briefly, looks like we did fill some gaps on the downside, and of course we had this gap that was initially for Monday that we filled and it ended up sort of acting as resistance and as well as the previous sort of pivot high. So yeah, it's everything's kind of coming back into its eight moving average. And I think the big support level, or rather the resistance level for next week, is this 607 mark. I would really like for it to reclaim the 607. Otherwise, I think we might even get a little bit move lower into these two previous gaps. And QQQ, a pretty similar story as well. Again, kind of filled the gap. And I would want to watch this 525 level or almost 526 on Nasdaq to see if it can hold that and get back above it. Otherwise, I think we'll take a little bit more volatile to the downside as well. But yeah, I mean overall, very crazy week. I mean, we started the week almost down 4% on Nasdaq, and then we saw a pretty nice rally, almost up 4.25%, but then closed the week a little bit higher. But yeah, or sorry, I guess it was still lower from that point. But yeah, I mean it's pretty crazy as expected, and we also had FOMC on Wednesday, so I think from the overall reading. At least my personal take is I think Powell is a little bit more hawkish. He's looking at the overall market, of course, economic data and things like that, but his more concern is with any persisting, or not persisting, any possible upcoming inflation metrics with any of the tariffs or any of the new policies that the new administration will be doing. So, I think they're not in a rush to cut rates anytime soon. And I'll show you the Fed funds future. Let me pull it up. So the Fed fund future actually for the next meeting, which is in March, was I think it was a little bit higher. It was almost at a 25% or maybe a 30% chance of a cut. Yeah, so it was 27% chance of a cut, and then now it's down to 18%, at least for this next meeting. And then you can look into a little bit into the future in May. So for May, it's almost a 37% chance cut for a quarter, and now we're even possibly pricing in a 5% chance for a 50 basis point cut. But yeah, I mean, I think he's just going to be watching the metrics as they always have, and there could definitely be some unexpected inflation increase, especially with any of these additional tariffs. But I mean, that'll take time for it to kind of show itself and whatnot. So. Yeah, I'll try to post some more charts. I think I might do like a PDF version where I'll just kind of go over a watch list and post some charts and things like that with some levels and support and whatnot. But again, I'll just go over BABA really quick since I've been talking about this thing for a couple of weeks. So as expected, or not as expected, but we kind of did break into the $100 range, and then since we are pretty overextended, we did see a little bit of a red day today. But, when you have such a large move, seeing a red day is not a bad thing. It's to be expected. And, it's one of those things where it might even give you a buying opportunity and whatnot. So, I'm still pretty bullish on KWeb and BABA in general. So hopefully, into the February and next couple months, we do see some continuation, which would be really nice. And I'll be watching some other stocks and things like that. But if you look at, again, on TOS, you can look at the S&P as a whole. So if you look at for the month, there are actually quite a few stocks that were up almost 30%. So Constellation Energy, which has a huge correlation with AI, and any of the they have a really strong correlation with any of the AI sort of metrics, just because they're providing the energy source for those. And then, of course, CVS, I think, reversed, which was kind of surprising to me. I think this was more so just an overall oversold bounce. GE, Vista Corp. So we had a pretty unique basket of stocks that were had quite a bit of performance for the month. Even Starbucks, which has been pretty beaten down, and now we're just kind of seeing this bounce. And maybe we'll see some continuation. The new CEO did seem pretty optimistic, so kind of see with new management, new CEO, if they're able to turn the ship around. I think this one's been a pretty big laggard for almost, yeah, I mean, for basically since COVID. It was back near COVID highs this past couple weeks, or actually this month, and now it's just trying to make its move higher. But yeah, maybe something to monitor and whatnot. But when markets are pretty volatile, like we saw today, I would always kind of like to keep a watch list of these stronger stocks, because those are the ones that are going to rebound the best. Right now, if you're keeping tabs on the losers, or rather the stocks that are underperforming, they're going to continue to underperform, and it'll be a little bit harder for those to sort of rebound. But at least for the way I look at it, and the chart I posted on yesterday, is that you want to stick with the winners and cut the losers as much as you can. So yeah, so just kind of keep a watch of some of the strong stocks going into February, and look any for any sort of buying opportunities and things like that. Um, then I wanted to show, actually, I wasn't going to show this right now, but we can go ahead and cover it. So, uh, this is a very interesting chart for Apple's revenues for the past almost, yeah, since 2012. If you kind of look at the iPhone sales, it's really just stalled out for the past almost 5 years. There really hasn't been much progress in the sales, and yet Apple keeps on compounding, right, and keeps on growing. So I think the biggest influence, the biggest factor for this really is just the buybacks. Apple is one of the stocks that have had the biggest buybacks, and I think that's kind of what's driving the price, as well as the passive fund buying with Vanguard and any of these other ETF funds. Because I mean, valuation wise, they're just kind of stuck. If you're looking at their revenue, they're not able to compound as much as they once did. And the only thing that's really growing is their service revenue, which is still pretty nice, but iPhone sales have kind of really dragged down and whatnot. So I thought this was pretty interesting, showing you that, hey, the story doesn't necessarily match up for me. It doesn't matter if you hate or like Apple, but it's kind of a interesting sort of stock. And then I'll show you on the flip side, another reason I really like Uber is that Uber has been so this is the blue line is the total gross bookings, and the gray bars is the revenue. And Uber right now is compounding almost a 32% year revenue. They've been doing really well. And I think, when it comes to fundamentals, you want to see companies that are very cash flow positive, like that continue to compound their revenue, and exhibit some free cash flow and things like that. So, while this is also, I think there's you need a little bit more of a positive story involved with Uber, whether it's any of the autonomous driving or things like that. But fundamentally, I think this would be a solid stock to to sort of watch and things like that. So, kind of showing the tale of two different companies, one that's actually doing well on revenue, and one that's, barely growing at even 8% of their main iPhone revenue, and 8% total revenue overall. So pretty interesting stuff. For this week, we have quite a few earnings again. We have Palantir after the close on Monday, Tyson, and then on Tuesday we have PayPal, and then of course AMD and Google, Chipotle, and even Spotify, which has been pretty good stock as well. Then Wednesday, Uber, ARM, Qualcomm have some semis, and then Thursday we have Eli Lilly, Roblox, Amazon, Net, Affirm, and kind of some other stocks I'll be paying attention to. But the initial reaction from this week was not the strongest in my opinion, but it might just take a little bit of time to sort of digest. And yeah, hopefully we can get a move higher, but consolidation isn't the worst thing either. Um, and if you look at what else did I want to show? Oh, I wanted to show this as well on the note of revenue. If you look at Meta's Meta had a stellar quarter. I mean, look at this compared to last or 2024 compared to 2023. I mean, they're just really doing well in this advertising revenue, and Zuckerberg has really turned the ship around. So, just again, Meta versus Apple. If you're looking at the compounding effect, it's not, Meta's revenues compounding almost 35%, which is great. So, just Taylor is showing some, both sides of the coin here. Um, then lastly, we can go over this rotation chart again. This will update more on Monday, but I did notice or mention that we do have some risk off sectors, some more defensive sectors that are starting to show some strength, as well as we do have some interest or some bullish momentum into the semis. Well, rather we did until Friday night, and the markets open on Monday with the whole DeepSeek news. I'm sure this will take a turn to the downside as well as the tech sector. But if it's indicating some risk off lament or risk off for the overall market, then just that's just something that we have to pay attention to. Lastly, I'll go over where's my there it goes. So been sharing the oscillator, and again, it's kind of stalled out since last week, and again, this will probably update tomorrow to have a better picture. I think it updates at midnight, but we're kind of stalled out, and we're somewhat near an oversold area, so kind of not the best for new positions unless it's a very robust news or something that's very attractive. And kind of shows the overall whipsaw action that we're exhibiting right now. So yeah, I mean it's been a pretty interesting week, and next week we will, I'm sure, as always, kind of continue with that. We can go over some quick economic news reports for next week. So we do have PMI. And then this will be the ADP unemployment. Of course, we'll have actually we should have non-farm payroll. So that's yeah, U.S. Unemployment. Sorry, yeah, it's usually does NFP, but yeah. So we have the main official employment report, which again will give the Fed's indication of a weakening or a strong labor market, but Um, yeah, that's all I have. If you have, if you find any value, if you want to add your friends to the group, please feel free. We have added the invite link to the top of the description. And yeah, I hope you guys have a great weekend.